old partners will be given. Let's say there is two partners, their old capital is 50,000, 40,000 in the balance sheet it is given. Okay.
Okay, sir.
Now you have added some adjustment in this, like goodwill, profit, revaluation. You have adjusted all the items, either added the item or deducted the item, and then you have calculated the final adjusted balance. This is called adjusted capital.
Yes, sir. One dot was here. This goodwill, profit and loss, and I think revaluation account. All we have to distribute it in old ratio or new ratio.
All these items, okay, all these items we have already covered in the previous topics.
Yes,
we
sir.
have done reserve accumulated profit or loss. Yes.
Yes.
For that, there was some specific ratio that you have already written in your notebook.
Yes, sir.
I also taught you revaluation.
Yes.
And also the goodwill. So we have to do all the adjustment according to the concept given related to that topic.
Okay, sir.
Okay. So in revaluation profit, generally reserve is distributed in old ratio, revaluation profit in old ratio. Goodwill, the existing goodwill is written off in old ratio, but the valued goodwill that is brought by new partner, okay, is distributed in sacrificing ratio.
Yes.
So we have to do these adjustment according to the topic we have studied already.
Yes. Okay.
Okay. So if you have any confusion, let's say you have confusion about the revaluation profit, then study the revaluation concept that we have done before this concept.
Okay, sir.
Okay. And you have any doubt about reserve or profit, then go for accumulated profit reserves or accumulated loss concept. If you have any doubt for goodwill, then go for hidden goodwill or existing goodwill or valued goodwill concept. So these are the concepts that we have already covered in this chapter. And if you have any doubt in that topic after studying that topic, then ask the question from me.
Okay, sir.
Okay. So these topics, you can find it in your notebook. And if you don't understand any concept, then ask.
Okay, sir.
Okay. So the ratio, all things is given there. Now, so first thing is calculate new ratio. The second is calculate adjusted capital of each existing partner. Okay.
Okay, sir.
Now add the new profit share. New profit share of all existing partners. Calculate adjusted capital of each existing partner and add all the adjusted capital. Leave this, we will write this in next step. Okay, step 3, add the new profit share. This will be step 2, sorry. This is step 4. Step 3 is add adjusted capital of existing partner. Okay.
Okay, sir.
Now Step 5 will be calculate total capital of firm. Now, how to calculate total capital of firm?
Total capital of firm is new partner's capital into reverse fraction of his share.
Yes, new partner's capital there in previous case, yes.
Yes.
But in this case, we have to take adjusted capital of old partners. So total adjusted capital. This is we have calculated in step 3.
Okay, sir.
And multiplied by reciprocal of total profit share of old partners. So we are taking capital of old partners. So that's why we are taking the profit share of old partners. This is a step 4.
Okay, sir.
Okay.
So if
And
the
after
fraction
that,
is 1/3, we have to multiply it by 3/1.
yes. Okay.
Okay, sir.
Now step 6 is deduct total adjusted capital, or leave the adjusted capital. Actually, there is 2 methods for calculating partner's capital. So don't deduct. Just calculate new partner's capital by following formula. Calculate new partner's capital. So it will be total capital in step 5 that we have calculated, total capital of firm multiplied by new partner share. Okay.
Okay, sir.
So this is when this is case 2 actually. So I'm writing, please write it down or take a screenshot. Case 2, calculation of new partners capital on the basis of old partners capital. Is this clear?
Yes, sir.
So write it down or take this screenshot.
Sir, can you scroll down? Sir, the capital of I can't see. Yes, sir, done.
Okay, now the quotient. I have given the quotient for this.
No, sir.
Okay. Okay, so question number 77. You can see the question.
No, sir. Yes, sir. Now I can see.
Okay. So A and B were partners in a firm sharing profit in 3:1 ratio. They admitted C as a partner for 1/4 share and in the future profit. Okay. C was to bring 60,000 for his capital. So C is bringing his capital. Capital is given in the quotient. So this is case 1 or case 2?
Case 1.
Case 1. Because in case 2, there is no information about new partner's capital.
Yes.
So the balance sheet of A and B at 1st April 2016, the date on which C was admitted was given this. So there are some information about these things. The other terms agreed upon were goodwill of the firm was valued at 24,000. Land and building were valued at 65,000 and plant and machinery at 60,000. Provision for doubtful debts was found in excess by 400. A liability of 1,200 included in sundry creditors was not likely to arise. The capital of the partners, this line is important. Please read.
The capitals of the partners be adjusted on the basis of C's contribution of capital to the firm.
Yes. What does it mean?
We have to adjust the capitals of existing partners according to the C's contribution to the firm.
Yes. So on the basis of C capital and his ratio, we will adjust the partners of the capital of A and B.
Okay, sir.
Okay. The last line is excess or shortfall if any be transferred to current account. Generally, okay, we withdraw the amount or we bring the amount, whatever there is excess or shortfall. But in this portion, it is saying that if there is any excess or shortfall, then it will be transferred to partner's current account.
Okay, sir.
Okay. Prepare revaluation account, partner's capital account, balance sheet of new firm. Okay. So this is our portion. Let's solve this. Okay. I will solve the portion from the book. So if you want to see the portion, then take the screenshot.
Yes, sir. Done.
Taken the screenshot.
Yes.
Okay. So question number 77 it is. First thing is we have to prepare a revaluation. Yes.
Yes.
So let me prepare the format first for everything. Okay. First is our revaluation. After this, partners capital account. Now there is two partners, existing two partners, and there is one new partner. So total 3 partners we have. This is capital account. And the last one is our balance sheet. Okay, so we have created the main solution format. After that, we will do the quotient revaluation account, the heading particular amount, particular and amount. After that, balance partners capital account. So in this, there will be particular A, B, and C, then particular A, B, and C. And the last one is balance sheet. As on the date is 1st April.
Yes, first step.
First is liabilities, then amount, then assets, and then amount. Now, okay. So first of all, goodwill of the firm was valued at 24,000. So working note number 1. There is no information about goodwill brought by new partner. Yes,
Yes.
but if there is information about goodwill, then we have to adjust the capital of new partner according to this goodwill. Yes.
Yes, sir.
Okay. So first thing is goodwill is distributed. First thing, a new ratio. For distribution goodwill, we need new ratio. So in every question, if there is no information about sacrificing gaining ratio, then we have to calculate new ratio and sacrificing first. This is your first step in every question if it is not given. Okay.
If the new partner's goodwill is not given, you have to find new ratio and sacrificing a ratio.
No, no. In any of the situation, you have to calculate new ratio first because new ratio, sacrificing ratio is required for
Okay, sir.
goodwill or for any other type of distribution in adjustment type question.
Okay, sir.
So new ratio. Now the profit sharing ratio of A and B is 3:1 and they admitted C for 1/4 share. There is no information apart from these two. So it is first case. So it will be let total profit share of firm profit share of firm 1. Now balance for A and B will be 1 minus 1/4. That is 4. 4 minus 1, 3/4. Now the new ratio. New ratio of A will be 3/4 into 3/4. For B, it is 3/4 into 1/4. And for C, it is 1/4. So 9/16, 4/16, and 4. What?
Yes, I think correct.
Is correct.
Yes, because we have to bring 16 only.
Yes, we have to bring 16 only, but there is some mistake here. I think I have done some mistake. There is some mistake I'm doing. Yes, sorry. Is not 4/16, it is 3/16. Yes, 934. Actually, if total denominator should be same with this. Yes. So I total it. It was 9, 4, and 4. It becomes okay. Shadmaan.
Sir, your voice is lagging.
Again.
Yes, sir, I can't hear you.
Just 1 minute. Is it fine?
Yes, sir, now I can hear.
Okay. So the ratio is 9:3:4. Actually, when I'm calculating the ratio, there was 9/16 for A. For B, it was 4/16. So when I total the numerator, it becomes 17, which is not equal with the denominator. So that's why I thought it is a mistake.
Okay, sir.
Okay. So this is our first thing, that is new ratio we have calculated. After that, the second thing is working note number 2, goodwill. Working note number 2, goodwill.
Okay, sir.
So what we have to do with the goodwill? The value of goodwill for the firm or firm's goodwill is 24,000, and new partner share, new partner, you can say contribution, will be 24,000 into 1/4. It will be 6,000. Okay.
Okay, sir.
And the share of A and B in this 6,000, their sacrificing ratio will be 3/4 and 6,000 into 1/4. So A will get 4,500 and B will get 1,500. Is this clear?
Okay, sir, got it.
Okay.
It's according to
Now,
the ratios, right?
yes, the sacrificing ratio.
Okay, sir.
Okay, so after this, revaluation account. Land and building were valued at 65,000. The actual value of land and building was 40,000. So there is a profit of 25,000.
Sir, one doubt.
Yes.
Sharing profit ratio is 3:1. So that is only sacrificing ratio.
Yes, it becomes the sacrificing ratio. Actually, when you study the case one theory, then you will see the sacrificing ratio in first case is same as the old ratio. When you calculate it, you will get the same amount.
So, sir, if we have to calculate sacrificing ratio, how will you calculate?
Old ratio minus new ratio.
So that becomes sacrificing ratio.
Yes, sacrifice equals to old ratio minus new ratio.
Okay, sir.
The formula, this formula you have already written in your notebook, I think.
Yes, sir. But I just got doubt. Didn't click.
And what is the formula for new ratio?
New ratio.
It is old ratio minus sacrifice or old ratio plus gain.
Old ratio. For the new ratio.
Yes.
Okay, sir.
Okay, so land and building is increased by 25,000. That's why it is a profit. It is written on the credit side. The second item is plant and machinery 60,000. The plant and machinery value was 70,000 and it becomes 60,000. That's why it is a loss, and it will be on the debit side 10,000. After that, provision for doubtful debts was found in excess by 400. Means we have to decrease the provision for doubtful debts. So it is also a profit.
Sir, doubtful debts means there is doubt that we will give them the amount.
There is a doubt that they will give us the amount.
So excess means it didn't increase.
Excess means it is more than what we thought.
Okay, sir. So they'll give more now.
Actually, in the question, you can see the data is given.
Yes, sir. On
It
the asset
is,
side,
yes, how much amount?
35,000.
And what is the provision?
Provision of doubtful debts is 1,000.
1,000. So they are saying that this provision is, we have created more provisions. Means there is less doubt on the 400 amount. So it should be 600 only.
So I still didn't understand.
Okay. Okay. Let's say you have 35,000 receivable from someone, not someone. There are many person you have to receive this amount from. Okay.
Okay, sir.
And you have doubt on some of them, and total amount is 1,000, on which you have doubt that you will receive it.
Receive it or not receive it.
Yes. So you have doubt that they will pay you.
Okay, sir.
Now you think that in this, you thought someone to be bad, but it is not actually bad. They will pay you the money. Now you are thinking like this. So you thought in past that they will not pay you, but at the present time you are thinking that they will pay you. Means 400 in this 1,000. There is amount receivable from someone 400, which is now good,
Yes.
not doubtful. Okay.
Okay, sir.
So total amount that is bad in past was 1000, but it is now 600 only.
Yes.
Now you have doubt on only 600 amount.
Yes, sir. Got it.
So this is profit for you.
Yes.
So that's why 400. The next is a liability of rupees 1200 included in sundry creditors was not likely to arise. Means in sundry creditors, the total amount is 70,000 and there is a 1200 included in that amount, which is which we don't have to pay now. So it is also profit for us. Okay.
Sir, I didn't understand this also.
Okay. So total amount payable is 70,000. Let's say we have to pay only 65,000. Then
Yes, it's a profit.
it's a profit. So it
Yes.
is same that in that 70,000 creditors of rupees 1200, we don't have to pay.
Okay, sir. Got it.
Okay. The capital of the partners be adjusted on the basis of C contribution. So now there is no other adjustment for this done.
Yes,
So
sir.
it total amount 25,000, 26,000, 26,600 it is. 26,600 and two partners capital account. Actually, no, it will not be a capital account. It will be current account.
I think both are same only, capital and current.
Tell me.
So can you
Yes.
repeat?
You tell me that it will be current or capital.
It will be current account, but current or capital both are same.
Both are same. Do you remember the method which we use to prepare capital account?
No, sir.
Actually, there is two methods for preparation of capital account. One is fixed capital method and second is fluctuating capital. In
Yes, sir.
fluctuating capital method, we only prepare capital account, not current. But in fixed capital method, we prepare capital account and current account, both. So if they both are same, then why we are preparing it separately?
Yes, sir. No, I remember.
So 16,600 is total amount. But if I will transfer it to current account, then you will not understand the adjusted capital. Okay, leave the portion. I will change the situation here. Okay. So it
Okay,
will
sir.
go to capital. Okay.
Okay, sir.
A and B will get how much? 3:1. So 4,154 B and 12,454 A. Okay.
Okay, sir.
Now it will be transferred to the capital by revaluation. 12,450 and 4,150. They also get some share in goodwill. So buy premium for goodwill. Okay. Actually,
Sir,
not
why
premium for
are
goodwill.
we?
It will
Why
be
will we
current.
write premium?
Means
Like we can just write by goodwill. Why are we writing by premium goodwill?
premium for goodwill.
Okay, sir.
Actually, it is brought by new partner. That's why it is called premium for goodwill. Means they are contributing.
Okay, sir.
So we are transferring it to C current account, not because he is not bringing goodwill. There is nothing written for goodwill. Yes.
So yes, so we're going to C now.
Yes, so we have to take it from C capital, but it is in the quotient, it is saying that we have to transfer the balance into current account. So we are taking from C current account. Okay.
Okay, sir.
So C current account, if we distribute total 2400, oh, sorry, 24,000, 6,000, 4,500 and 15. Yes, this was the yes, 4,500 and 1,500. We have written this.
Yes, sir.
Now, we have completed our revaluation, we have completed our goodwill. There is a general reserve written also in the balance sheet. So general reserve will be distributed in old ratio. So 7,500 for A and 2,500 for B. And capital balance of A and B is given in the quotient. It is 50,000 and 80,000. Yes. Yes or no?
Yes, sir, it is given in the liabilities.
Okay. Now the time for adjusted capital. Okay.
Okay, sir.
So for adjusted capital, what we do here is there is no item we have to write on the debit side. Yes.
Yes.
And there is no item on the credit side also.
Yes.
So 50,000, 4,500, 7,500, total is 62, 74,450. 80,000 and 4,084, 88,150. Is this clear to you? We have calculated the total.
Yes, sir, done. Clear.
Okay. Now, if there is any item written on the debit side, let's say there is 2,000 here written, there is 3,000 here written on the debit side of A and B. Okay.
Okay, sir.
Now, in this part, we don't have to write any balance here because we are calculating adjusted capital. So what we will do, we will deduct this 2,000 from this amount and we will deduct this 3,000 from this amount and write the balance in working note number 3. Adjusted capital of A and B. Understood?
Yes, sir.
So how much adjusted capital for A and B? It is 74,450 and 88,150 because these two amount I have taken on assumption basis. So but if this was given in the quotient, then you have to deduct it from here to calculate adjusted capital.
So if it is given in the question, how it will be said in the question?
Like existing goodwill is given.
I didn't understand, sir.
Existing goodwill is the written off in old ratio between partners. Yes.
Yes, sir.
So it will go to the debit side of capital account. So if you write off the existing goodwill, then it will came automatically.
Yes.
Then you have to deduct it. So any item which is to be written on the debit side, if it is given in the quotient, then you have to deduct it from the total of credit side to calculate adjusted capital.
So it will be like this much amount should be written on the debit side of partner's capital account.
Yes.
Okay,
Like
sir.
in revaluation account, let's say in the revaluation account, there is a loss of 4,000.
Okay, sir.
Okay, so it will go to the debit side of capital account. Then it need to be deducted from this total.
From both of them,
Yes,
40,000.
4,000.
Okay, 4,000.
So 4,000, if there is a loss of 4,000, then it will be distributed between A and B. It will become 3,000 and 1,000. And it will be written here, 3,000, 1,000.
So it's a loss, so it will come in the debit side of revaluation account. It will be distributed among the partners according to our ratio, and that much will be deducted from the partners in partners capital account.
Yes.
Okay, sir.
So adjusted capital is 74,450 and 88,150. This is their adjusted capital. Now, after adjusted capital, now we have to calculate proportionate capital. Total capital of firm. To calculate total capital of firm, which formula we use? In this question, new partners capital multiplied by reciprocal of his share. Yes.
Yes.
So his share is 1/4 and his capital is 60,000. So 60,000 into 4/1, it will be 2,40,000. Yes.
Yes.
Now, according to new ratio, if we distribute this amount, so A and B capital we will get 2,40,000. The new ratio was 934. So it is 9/16 and 2,40,000 into 3/16. So 15,45,000 here and 1,35,000 here. Is this clear?
Yes.
So it will be written in partners capital or as a balance to balance CD. 1,35,000 and 45,000. Is this clear?
Yes, sir.
Now we will calculate the balance. So if the debit side and credit side is more than, then remove this total because we don't need it now. We will write it if it is more than the credit side. So in A, debit side is more or credit side. The debit side is more than the credit side. Yes.
Yes.
And in B, credit side is more than the debit side. So now the balance is transferred to current account. It is said in the portion. So to current account. 88,000. So 43,150 will go to current account. Here it will be current account. It was 74,450. So 60,550. Is this clear?
No, sir, I didn't understand. The current account, how for only B it's going in current account? Why not A?
Here in A, it is for B, it is on the credit side. For A, it is on the debit side because the total of debit side in A column is more than the credit side. So the balance is calculated on the credit side in A.
Okay, sir.
And for C, it is 60,000. Is this clear?
Yes, sir, it's clear.
Now this capital 1,35,000, 45,000 and 60,000 will be in balance sheet. Capital A 1,35,000, B 45,000 and C it is 60,000. Now all the assets name will be written with their new amount. Land and building, it is 65,000. Plant and machinery, it is 60,000. After that, stock, there is no change in stock, so the old value 30,000.
Okay, sir.
There is change in debtors. Debtors value was 35,000, but the provision amount will change. It is now 600.
Yes.
So 34,400 will be. After this, investment, there is no change in investment also. So same amount. Investment 26,000, and cash. Cash is 10,000, but new partner has brought 60,000. So total 70,000 cash. Okay.
Sir, how it becomes 70,000?
10,000 is the opening balance and 60,000 brought by C.
Sir, opening balance is in the question.
Yes, balance sheet, you will see the cash 10,000.
Yes, sir, it's there.
Yes. So 25, 125, 155, 155, 225, 231, 251, 255, 285, 2,85,400. Actually, there is a current account of A on the credit side. Yes, it is on the debit side here. The balance of capital for B, it is on the credit side. So for this balance, this is negative balance actually. Yes.
Yes, sir.
So 60,550, it will be a current account.
Sir,
And
how will we know
B,
that we have to add that 10,000 for C? Because it's cash. If it was bank, we should add also.
yes,
So only cash in bank will come, nothing else.
nothing else. Other
Okay,
items, if there is a machinery given. If there is machinery given, then it will be added in plant and machinery.
Okay, sir.
Okay, now creditors value is also changed. So it is 68,800. Okay.
Okay, sir.
Now, just now let me total the amount. Or is there anything that we have to write? Sorry, it is 240. It is 2,40,000. Okay.
Okay, sir.
So 2,40,000 plus 68,800 plus 43,150. So 351,950. Total on the liability side, it is 351,950. On the asset side, it is 65,000 plus 60,000 plus 30,000 plus 34,400 plus 26,000, 70,000 and plus 60,550. So there was some less amount. Yes, yes. There is a C current account, 6,000. Where we get this C current account? Because he has not brought his share